Have you ever found the perfect home online, imagined where your furniture would go, pictured your family living there, and then discovered you couldn't buy it? Unfortunately, it happens more often than you think. Most buyers believe the first step in purchasing a home is finding a house. That's actually one of the biggest mistakes you can make. The real first step is getting fully underwritten and pre approved by a lender. Today, I'm going to explain exactly what that means, why it matters, and how it can give you a major advantage over other buyers in today's market. But before we get into the benefits, let's talk about what happens when buyers skip this step. Many people start browsing homes on Zillow, Realtor.com, and other websites months before speaking with a lender. They get emotionally attached to homes they may not qualify for. Some discover their monthly payment would be much higher than expected. Others find out there are issues with their credit, debt to income ratio, employment history, or down payment funds. The worst part, most of these problems could have been identified and fixed before they ever started shopping. That's why financing should always come before house hunting. So, what exactly is a pre approval? A standard pre-approval is when a lender reviews your basic financial information and estimates how much home you can afford. They'll typically look at your income, credit score, existing debts, employment history, and available assets. Based on that information, they issue a pre-approval letter. This is a good start, but it's not the strongest position you can be in. A fully underwritten approval takes things a step further. Instead of only being reviewed by a loan officer, your file is reviewed by an actual mortgage underwriter. The underwriter is the person who ultimately determines whether your loan gets approved. They review documents like pay stubs, W-2s, tax returns, bank statements, asset documentation, and employment verification. This allows many loan conditions to be cleared before you've even found a home. Think of it like completing most of the mortgage process before your offer is even submitted. By the way, if you're finding this information helpful, make sure you subscribe to the channel. Every week, I create videos about buying, selling, investing, and living in Southern California, especially throughout Los Angeles County and Orange County. And stay until the end because I'm going to explain a mistake that can completely derail your mortgage approval even after you've been pre-approved. Now, let's talk about why sellers care so much about fully underwritten buyers. Imagine you're selling your home. You will receive two offers. The first buyer has a standard pre-approval letter. The second buyer has already completed underwriting. Which buyer would you feel more confident accepting? Most sellers choose certainty. They want the transaction that is most likely to close without surprises. A fully underwritten buyer represents less risk. That's why this strategy can sometimes help you compete against offers that may even be slightly higher. In competitive Southern California markets, every advantage matters. Cities like Lakewood, Long Beach, Cerritos, Cypress, Los Alamitos, Huntington Beach, Irvine, and Tustin often see multiple offers on desirable homes. When sellers compare buyers, they're not just comparing price. They're comparing the likelihood of a successful closing. A fully underwritten approval can help you make your offer stand out. Another major benefit is speed. A traditional mortgage process can take 30 to 45 days or longer. Because much of the underwriting has already been completed, fully underwritten buyers can often close more quickly. A faster closing timeline can be extremely attractive to sellers. In some situations, speed alone can help win the deal. There's also a confidence factor. Buying a home is one of the largest financial decisions most people will ever make. The more uncertainty you eliminate upfront, the smoother the process becomes. When you're fully underwritten, you generally have much clearer understanding of your purchasing power, your estimated monthly payment, your required cash to close, potential issues before they become emergencies. Instead of guessing, you're making decisions based on verified information. Now, here's the mistake I promised to discuss earlier. Even after being pre-approved or fully underwritten, most buyers accidentally create problems for themselves. Some examples include financing a new vehicle, one of the worst we see most often, opening new credit cards, making large unexplained bank deposits, changing jobs, missing payments on existing accounts. Remember, your lender continues reviewing your financial profile throughout the transaction. Just because you've been approved doesn't mean the process is over. The safest approach is to avoid major financial changes until after you've received the keys to your new home. So if you're considering buying a home this year, don't start by looking at houses. Start by talking with the lender. Find out how much you qualify for, what your monthly payment will likely be, how much money you'll need to close, whether you qualify for down payment assistance, or whether a fully underwritten approval is available, which if you're working with me, it is. Once you've completed that step, you'll be shopping with confidence and positioning yourself as a stronger buyer. If you're thinking about buying in Los Angeles County or Orange County and you'd like an introduction to a trusted lenders who offer fully underwritten approvals, reach out to me. I'm chriswall with Onyx Homes, and I'd be happy to help guide you through the process. If you made it this far, leave a comment below and tell me what's your biggest concern about buying a home right now. I'd love to answer your questions in a future video. Until that time, have a good day.